Good morning and welcome to Planning Your Retirement. This class is for individuals with 10 years or less until retirement and one of our most comprehensive classes. I am the facilitator today. My name is Derek. I work here at the Sacramento Regional Office. And our presenter is Angeline, who also works here with me at the Sacramento Regional Office. This class is approximately 2 to 2.5 hours. If you have any questions, please use the Q&A feature as the chat feature has been disabled. So if you put a question in chat, we will be unable to see it. Your cameras and microphones have been disconnected. So once again, Q&A feature down at the bottom of the screen. Feel free to use that, and I will answer as many questions as I can. We do have a large class set up for today. If there's any technical difficulties, please hang in there. We will try and resolve them as soon as possible. So also at the end of the class, you should have been sent a evaluation, and feel free to complete that at your convenience. They are completely optional. And you should have also received the booklet, which follows the slideshow here pretty closely to in the same order as the class itself. So without any further ado, I will turn this over to the presenter, Angeline.
Thank you, Derek, and good morning, everyone. Welcome to your Planning Your Retirement class. Let me go ahead and get started here. 1 second. So today's class, we're going to go over a couple different things. The first part of it that we're going to go over today is a little bit of retirement income planning. And just kind of bear with me for whatever reason. Earlier, the presentation was not flowing good, maybe because of the internet. But again, we're in a virtual environment, so just be a little patient with us. So again, excuse me, we're not financial advisors, but we would like to provide you additional information other than your CalPERS pension, just so you're aware of other retirement incomes that you may have. So first, we're going to go ahead and start off with personal savings. Personal savings include like 401ks, 457s, or 403bs, any personal savings accounts that you may have, any IRAs or Roth IRAs, brokerage accounts, stocks, or mutual funds, or any type of real estate property. So these are going to be known as your personal savings. You might want to contact with a financial planner to get more information about these different types of retirement income sources if you don't already have them. The next section that we're going to go over is defined contribution plans. So defined contribution plans, these are retirement benefits that are determined by the contributions you make into the plans and the investment earnings. There's no guaranteed benefits on these type of different plans. You are also responsible for deciding how much money to contribute to the plan and how to invest your money. Most of these plans do allow you to contribute after age 50. So again, if you have a defined contribution plan or thinking about enrolling into one, you may be able to put money in after you retire. So there are plans out there that continue that allow you to continue to contribute to. For public agency and school members, so this class does not only have state members, but we're a combination of public agency, school members, and state members. So the information that I'll be going over today will include for everyone that is in this class today. So for public agency and school members, they offer the CalPERS Supplemental 457 plan. They are a tax-deferred plan, and it's by contract only. So if your employer has a contract to provide the CalPERS 457 plans, then you would need to speak to your human resources department for more additional information on how to enroll into them. There may also be other defined contribution plans that you may be eligible to enroll into. Again, that's just checking with your employer to see what they offer. Now, for state members are they're allowed to go into the Savings Plus program. So they offer 457s and 401ks. It's on a tax deferred and after tax contribution options. There is also the CalPERS Supplemental Contribution Plan. on an after-tax basis. So again, if you have any additional questions or concerns or want to enroll into it, you would just need to contact Savings Plus to do so. Now for your Social Security pension or Social Security benefit, I should say. So Social Security is a federally mandated program of social insurance. The benefit that you receive will be based off of the year that you were born and wages earned over your lifetime. Benefits may be eligible or payable to eligible family members also. So again, if you are wanting to start to collect your monthly benefit from Social Security, it's just you contacting them and getting additional information. Now, many of you may want to know how do I qualify? So when you pay Social Security taxes called FICA on some of your pay stubs, you earn credits. So you need a minimum of 40 credits, 10 years of work to qualify for any type of benefit. Once you have the minimum, you can retire as early as age 62 with a reduced benefit, or to receive your full benefit, you must retire between ages 65 through 67. And again, it just depends on your year of birth. Now, many of you have probably heard that the windfall elimination, the WEP, and the GPO government pension offset have been repealed. If you have any additional questions regarding how that will affect your Social Security pension in the future, you may want to visit their website, which is here on the screen now. It's www.ssa.gov, or you could give them a call, 1-800-772-1213. If you have a Social Security, my Social Security account, this is an example of what it would look like. So if you don't have one yet, I would highly suggest you to do so. This is where you're able to get download any of your statements. You could review your statements just to make sure that they're reporting your working all your work correctly. And if they're not, then you would need to contact Social Security for them to correct it. The next section that we're going to go into today is your CalPERS pension. So this is going to be the class today of what we're going to talk about of how your pension works for you. So CalPERS pension is a 401(a) defined benefit plan that provides a lifetime benefit based off of the formula that you currently are working under. The benefits are also available for disability if you have a disability that's rendering you from doing your normal job duties, and also continuing after your passing, known as retired death benefits, survivor benefits. CalPERS manages the fund. So as you can see, the CalPERS dollar, so 55% of the investment earnings, that's where 55% comes from. CalPERS employers, it's 34%, and CalPERS members is 11%. Your next steps, so you would want to contact Social Security, contact your plan administrator, and contact a financial planner if you need to. You don't necessarily have to, but this is just a little bit of general information regarding what financial income you will have into retirement. The first section that we're going to go ahead and go into is the CalPERS retirement types. So for CalPERS retirement types, there's 3 different types of retirement that CalPERS offers. Service retirement, disability retirement, and industrial disability retirement. For classic versus new member, so this is very important for you to know what type of member you are. Excuse me. So for classic members, if you became a member prior to January 1st, 2013, or if you moved from one California public employer to CalPERS within 6 months of separation. A new member, you became a member on or after January 1st of 2013. You had no prior membership in any California retirement system, and you had a break in service of more than 6 months. New members will have different formulas, and you also may be affected. Your final compensation may be affected by limitations. Eligibility requirements for a service retirement. So service retirement, you have to have at least age 50 with 5 years of service credit. If you became a member after January 1st, 2013, then it will be age 52 with 5 years of service credit. Safety members still have age 50. So just so you're aware, if you're a safety member, the age factor may not affect you. For disability retirement, there's no age requirement, but you must have 5 years of service credit. If you have worked for part-time for at least 5 consecutive years, but have less than 5 years of service credit, you may be eligible for service or disability retirement. You would need to just speak to a retirement counselor, and we would be able to provide that information to you. There's also your industrial disability retirement. So industrial disability retirement is for, there's no age or years requirement, but it must be work related. So this is an injury or disability or illness that you have that is rendering you from doing your normal job duties, and it has to be in the safety classification. So industrial disability retirement is for safety members, disability and service retirement are for regular miscellaneous employees. Now that you know the earliest time that you can retire, you need to understand the differences if you change employers also. So again, you're under a different formula if you start changing different employers. So just be aware of that before you make any career changes. The section that we're going to go into now, we're going to go ahead and break down the retirement calculation. Again, just bear with me. So your retirement calculation, what CalPERS will do, we'll use 3 different factors to calculate your pension. First, we'll use your years of service credit, and then we'll take that and multiply by your benefit factor, which is your age at retirement. We'll take those two and we'll get a percentage. Once we get a percentage, that's the percentage of the final compensation that you'll receive, which equals your basic pension, your unmodified allowance. So what I'm going to go ahead and do is we're going to go ahead and break down each factor so you can understand the calculation a little bit more clearly. The first section, again, is years of service. How do you earn service credit? So service credit is based off of a fiscal year basis. It's fiscal year through July 1st through June 30th, and it's accrued based off of how you're paid. If you're hourly, 1,720 hours is 1 year of service credit. If you're daily, 215 days is 1 year of service credit. Or if you're monthly, 10 months out of 1 year is full-time, 10 months out of 1 year is 1 year of service credit. If you earn less than this, then your service credit is prorated based on the actual hours of work. So let's look at it in a calendar year format. So as you can see, this person, for instance, started on July 1st. So every month that they have worked full time, they earn 1/10 of a year of service credit. So as of April 30, they've earned 10 months of service credit, which equals 1 year. So May and June will not be counted because May and June are used kind of like as dormant months or makeup months. So if you're working full time at the end of April, you've earned 10 months of service credit. That's 1 year that you have earned. Now, most of us probably did not start on July 1st. So let's just give an example of, this person started November 15th. So what's going to happen is November, they're going to receive a partial of a month. And then every month after that, they worked full time. So as of April 30, this person did not receive 10 months of service credit. So in this case, May and June would be used because we're trying to get you closest to that 1 year period. So this person will earn 0.750 of a year. The next section that we're going to go into is your benefit factor. So this is your age at retirement. It's determined by your retirement formula. So whatever your retirement formula is, that's how we're going to calculate your pension in regards to your age part of it. Your formula that you work under is also dependent upon your employer's contract. So everyone in this class, some of you may have the same formula, some of you may have different formulas. So what I'm going to go into is give an example of what these different formulas look like. So first, let's discuss birthday quarters. What are birthday quarters? So birthday quarters go off of your date of birth, and this is also how we'll calculate your pension. The formula, your age factor, this is all what we're talking about right now. So let's take, for example, this person. This person's date of birth is March 10th. So every 3 months after their date of birth, they're going to earn a percentage increase towards their retirement. So their quarters start with March 10th, and then their quarter of a year will be June 10th, September 10th, and December 10th. So if you have a piece of paper and a pen or a pencil, I would go ahead and jot down this information so then you have this information to go off of. So again, I'll go ahead and give you a second to do that. So for example, this person's birthday is March 10th. So we use the month and the day. And then June every 3 months, June 10th, September 10th, and December 10th. Now, when we when we look at this and when we talk about formulas and percentages and age factors, this is the formula chart that you so the formula chart that I'm looking at now is just a miscellaneous state employee 2% at 55. So as you could tell, the let's see here. Your formula, so it's going to start at age 50 and it goes all the way to age 63. So this person, if this person retired at age 55, then their their formula will be, or their percentage of the the formula will be 2%. And then every 3 months after that, they'll have a quarterly increase. So let's say, for instance, give me 1 second. Okay. So let's say this person decided to wait until September 10th to retire. So as you can see, instead of us basing their retirement off of 2%, the age factor, then, excuse me, we'll do the calculation at 2.032%. As you can see, this formula does not max out until age 63. So if this excuse me, if this person decided to wait a little bit longer, then their max percentage would be 2.5 as the multiplier that we'll use. If for whatever reason you're already over the age of 63, then your formula, your age factor is not going to go any higher. So if you're 64 or 65, we will still use a calculation at 2.5%. But if you're younger than that, this is where you're going to maximize your pension, retiring either on your date of birth or one of your quarters. Now, if this person decided to retire on September 9th, they're going to miss that quarter because that quarter does not happen until September 10th. Another thing that I want to show you guys is like a 2% at age 62. So this formula is a little different. So every 3 months after their date of birth, it's still the same concept, but the percentages are a little bit different. So as you can see, they won't receive their 2% until age 62. If they decided to wait a little bit longer, they can, but their formula does not max out until age 67 at 2.5. So again, everybody's in different formulas, so that's just something to keep in mind when you're trying to calculate your own pension using your own dates. When you start comparing your pension to another person's pension, they might be under a different formula. So again, just keep that in mind. Oops, I went all the way out of it. 1 second. Okay, here we go. The next section that we're going to go over is your final compensation, which is your average pay rate. So your final compensation, so what is compensation? So compensation is payment you receive for each service performed during normal work hours. Final compensation is based on your full-time base pay rate, not your earnings. Some special compensation that's reported may be in addition to your base pay rate. So any safety members or classic members that are hired on or after January 1st, 1996, and new members hired after January 1st, 2013 may have a final compensation cap or compensation limitations. So again, you will on your MSS calculator, your online calculator, it may show you that you're under limitations. So just so you're aware of that, the calculator is designated to make sure of your limitations and what you could actually get from CalPERS. So if you have any questions regarding that, again, make a one-on-one appointment and we could go over that with you. The final compensation used in your pension calculation is going to be based off of whatever your average of your full-time base rate over the highest 12 or 36 consecutive months. And this is determined by your employer's contract, whether you're under a 12 or 36 month. Again, it's going to be based off of whatever your highest 12 consecutive months are or highest 36 consecutive months are. It's not determined by your last pay rate. So just keep that in mind. It's whatever your highest is. There's a lot of confusion where people think it's going to be the last 12 months or the last 36 months, where that's not necessarily the case. There is a final compensation adjustment. So if any of your service is coordinating with Social Security under your CalPERS covered employer, you do not pay contributions on the full amount of your earnings. Therefore, your earnings are not used to calculate your pension. So what CalPERS will do is we'll take a reduction of $133.33 off of your final compensation. And then the adjusted final compensation is what we'll use to calculate your pension. So again, if your service is coordinated with Social Security under your CalPERS covered employer, you do not pay contributions on the full amount of your earnings. Therefore, your full earnings are not used to calculate your pension. And this is why the reduction happens to your pension. Now, it's not going to be a monthly pension or a monthly deduction that's happening on your check every month. So that's not what you're going to see. This is going to be in the calculation stage of your retirement. The estimates that you receive either from our member services division, our estimates unit, or by using your MyCalPERS calculator, your MSS account, this already has it. If your pension is affected, then this is already taken care of. So it's not like you were deducting $133. That's already being taken care of. So multiple CalPERS covered employers may have some service that is coordinated and some service that is not. So if you've worked for multiple employers and some employers have it and some employers don't, then just know that the calculation from here from CalPERS will be adjusted accordingly. So if you had 5 years of service credit that you did put into Social Security and then 10 years that you didn't, so then just your 5 years will be affected and not the 10 years. So again, it's only time that is coordinated with Social Security. So the three factors that we'll use to calculate your pension will be your service credit, your benefit factor, and your final compensation. Putting it all together, this is an example of what it's going to look like. So for example, this person has 25 years of service credit. They have a benefit factor of 2%, which gives them 50%. So what's going to happen is their final compensation number is $4,366.67. They're going to receive 50% of that, which is the $2,183.34. Now, let's say, this person has room to grow in their formula and they wanted to wait 6 more months later. So this is an example of that person receiving a little bit more money per month under the final compensation than waiting about 6 more months. So instead of them receiving 50%, they're going to receive 52% of a little bit more of their final compensation because they've also received a pay increase. So this is a prime example of maybe you waiting a little bit longer to get a little bit more money. But again, everybody's situation is a little bit different. You don't necessarily have to retire on your benefit factor or on your birthday or one of your quarters. You don't have to do that, but that's where you're going to maximize your pension. By maximizing each different factor, that's where you're going to maximize the end result of your unmodified allowance. So your next steps, understand how your service credit is earned for your time base. Know what your retirement formula is. And know whether your final compensation is 1 or 3 years, or you could even have a mix of both. So again, just be aware of your formulas and the different calculations on how it will affect your monthly pension compared to someone else that that you're talking to regarding your pension. So it's important for you to know, just about yours. There are ways to increase your pension other than working. So ways to increase your pension is to purchase service credit. So a long time ago, there used to be where you would be able to purchase up to 5 years of service credit. So that has gone away. But there's other types of service credit that you're still eligible to purchase. Only if you're eligible to purchase, there are still purchases that you can purchase. So like, for instance, a redeposit or withdrawn contributions. So if you had an account with CalPERS and you refunded your contributions or rolled it over into another plan, you do have redeposit rights. So you're able to redeposit what you've taken out of the system. And what will happen is you would not only be putting the monies that you took out, but also it would replenish your service credits. If you had any time service prior to membership. So if you worked part-time and then you became a member of CalPERS, that part-time employment may not be showing on your CalPERS account. So that's considered service prior to membership. There's also a military service credit and like a leave of absence. There's other types of service credit that you may be eligible to purchase. We have the service credit purchase options publication 12 for review. That's going to explain your purchase options. This is once you log into your MyCalPERS account, this is where you're going to find additional information regarding the costing. If you think you're eligible, this is where you would go in your MyCalPERS account to see what type of service credits you're eligible to purchase. The whole process, you go from, so this is the next step in your MyCalPERS account, what it would look like. You're going to search for purchase options. Once you go to search for purchase options, like for instance, this person, whatever they decide to, let's just say they have service prior to membership. So which one it is, that's where you're going to select. And then once you do that, you're going to see your results. Once you have searched for your results, then you're going to save your results. And then this is where you would be able to get those service credit purchase estimates. Once you request the cost from CalPERS, some of the service credit purchases do have to be certified by your employer. So once that step is completed with your employer, then CalPERS will give you a costing package and will explain all the details, how much it will cost you, how much it will give towards your retirement. If you were to make that purchase, it will tell you the years of service credit that you're purchasing. So we'll have all the detailed information, but you have to go through all these steps first in order to get that information for yourself. And then this is, impacts on retirement status. This is a review of an estimate that someone did. So for this person, for example, they're going to be purchasing approximately 2 months of service credit, a little over 2 months. Their estimated cost is going to be $491. And then it also gives them the approximate increase to their monthly pension. Now, once you sign and submit for this, so this is just an estimate. Once you sign and submit on this, This is not telling you that you're going to purchase the time. This is just for you to get the costing package. Then the next step, once CalPERS calculates the cost for the purchase, then you're going to receive a package in your My CalPERS account under your service credit tab. And then that's where you're going to elect the purchase if you wanted to go ahead and move forward with it. Retirement payment, excuse me, retirement payment options have changed. So effective January 1st, 2020, new payment rules are in effect. So if you did a purchase prior to January 1st, 2020, your payment can continue into retirement, not unless you pay it off. Or you could choose the actuarial equivalent reduction where you have a pitch-in reduction for the rest of your life, but you're not making any payments towards that. You're taking the reduction instead. If you purchased it after January 1st, 2020, the balance has to be paid in full at retirement, or it will be converted to the AER. You could also do a partial lump sum with the AER. So again, you only have a couple different options. If you're in the situation you're ready to retire, what will happen is our member services division will automatically send out a letter to you within 30 days of you submitting your retirement application, and that will provide information on regards to how you could pay it off or if you continue your AER. This is the service credit purchase request. So this is a current balance of a person that has service prior to membership. This is what that would look like in your account. There's another thing that you could do. It's called converting unused sick leave to service credit. So what will happen with this is that your employer has to contract with CalPERS for this to be able to happen for you. It's sick leave is available to all state and school members. Public agency members are by employer's contract. So how this works, in order for you to be, so first your employer has to have a contract with CalPERS. And to be eligible, you must retire within 120 days from your separation date. So there's two requirements. Your employer has to have a contract for it, and also you have to retire within 120 days of your separation date. How this works is 1 year of service credit equals to 2,000 hours. So here's a calculation here. This person has 656 hours. You're going to divide it by 2,000, and that will give them how many months or years towards their service credit. So there's no minimum, there's no maximum. So if you have less than 2,000 hours, then that's okay too. Because for instance, this person has only 656 hours, it's still going to give them some type of months towards their pension. Your employer, once you separate your employer, report sick leave directly to CalPERS. Your sick leave does not change your retirement date or your age. So your sick leave does not push your retirement date out further. It's going to give you more years of service credit on your service credit tab. So remember the three factors: service credit, benefit factor, final compensation. Your sick leave is going to apply to service credit. Vacation and other types of leave cannot be converted to service credit, but if you wanted to push your retirement date out further, if you wanted to get another quarter, then you would be using some type of vacation leave or PLP days or something like that to get you to that next quarter or to a different retirement date if you wanted to use it. So sick leave works a little bit different. It just adds to your service credit, not pushes your date out further. So it's important for your next steps. Check to see if you have any service credit to purchase and know if you can convert your sick leave over to service credit. Before I go into survivor continuance, Derek, do you have any questions?
Yeah, we have a few here. Let's see. Let me get to some ones that would be probably pertinent to everybody here. Yeah, once you age cap in your formula, So if you have the 2 at 55 or 2 at 62, once you've age capped, the only way you're increasing your retirement at that point is increasing your salary and adding service credit. So even though you've age capped, doesn't mean your retirement doesn't increase anymore. It does. Service credit always adds value as well as getting raises because the more you work, the more you get, the more you make, the more you get. If you have final compensation and it's the 1 year final comp, it's any 12-month period in your entire CalPERS career. Most people, it's their final year, but it's not always that. I've seen people that were supervisors, knew they were going to retire, demoted themselves, and we use the supervisor salary because it's your highest 12 consecutive months, your entire CalPERS career. Doesn't have to be your most recent salary. We get that question a lot. What happens if you have 10 years at the 2 at 55 and service credit under 2 at 60? That would be what we call the split calculation. So what CalPERS does is we calculate how many years you have under one formula, and then we calculate how many years you have under the other formula, and then they're added together. The online calculator can do this. The online calculator also knows your formula, your birthday, and your birthday quarters. So running an estimate, the online calculator does know all of that information. It also knows if you are subject to the Social Security offset and will automatically be subtracted out. Those seem to be the, very common at this point.
Perfect. Thank you.
My pleasure.
All right. So we're going to go ahead and jump right into survivor continuance. So many of you probably are wondering, well, what the heck is survivor continuance? So first, we're going to distinguish the difference between a survivor and a beneficiary. So a beneficiary can be anyone that you choose, is not set by state law or set by law. A survivor is defined by state law. What is survivor continuance? So survivor continuance is a benefit that's paid monthly after your passing and retirement. It's provided to you at no cost, but it's fully employer paid. It's provided to all state and school members. Public agencies must contract for this benefit. So again, it's a fully employer paid benefit. When you pass away, if you have a survivor, they will continue to receive a monthly benefit. Survivors are in order as eligibility as this follows here. So first would be spouse or registered domestic partner, legally married or registered at least 1 year prior to the retirement date. Unmarried children under the age of 18 until they reach age 18. Disabled children who became disabled prior to age 18 and who have never been married, or parents who are economically dependent upon you for more than 50% of their support. So again, take a quick look at this. So once we go into the retirement estimate, you'll know if you'll have a survivor or not. The benefit amount depends on whether you contributed to Social Security under your CalPERS employment. If you were coordinated with Social Security, survivor continuance is going to be 25%. If you are not coordinated with Social Security, it would be 50%. If you have multiple employers, some were coordinated with Social Security and some not, the benefit will be prorated. All right, now we're going to go ahead and jump right into an estimate. See here. We're going to go ahead and go over the retirement payment options. So when you retire, there's plenty of options that you choose to provide a lump sum or a monthly check to your beneficiaries. The first section that we're going to go into is your survivor continuance of 25%. So the following example, their spouse is the eligible survivor and beneficiary. The survivor continuance is 25%. So this is an example. Oops, this is an example of when you use your online calculator. This is an example of what your estimate will look like. We're going to go ahead and break down each section of this. So the first option that I'm going to go over is consider your unmodified allowance. This is your highest benefit you could receive at CalPERS. Remember, the estimate that we're going over, this person has a survivor. So as you can see, survivor continuance is $581 for their survivor after they pass away. So this person's highest benefit is $2,325. They elect that, they pass away, survivor will get $581. Next one, return of remaining contributions. Return of remaining contributions, this person is going to receive a little less per month. Their pension drops down to $2,315. If they were to elect this, for example, down below it says if this member has 63,000 in total contributions, every month that they get a monthly pension from CalPERS is going to be reduced by $421. The contributions, the member contributions will exhaust themselves within 12 years, between 10 and 12 years. So that does not mean that your pension is going to stop at 12 years. This is just stating if you passed away prior to 12 years, whatever's remaining in your account is going to be payable in a lump sum. And also your survivor will continue to receive $581 per month for the rest of their life. If you surpass the 12 years, so let's just say that you lived 15, 20 years, 30 years into retirement, you're still going to receive your monthly benefit until you pass away. It's just that balance, you've already got back that balance within the first 12 years of you being in retirement. So then the only thing that will be payable would be the survivor continuance. So again, one more time, unmodified allowance, your highest pension, only thing that's payable is your survivor continuance. Return of remaining contributions, you're going to take a little bit less per month. But that means that if you pass away prior to 12 years, balance is protected and payable along with the survivor continuance. If you pass away after 12 years, then it's just survivor continuance. 100% beneficiary. How the 100% beneficiary works, this person's taking a little bit less per month, but this person's spouse is going to receive the same exact benefit. Once the member passes away, their spouse is going to receive 100% of their pension. So as you can see, they're going to be both the beneficiary and survivor. You're going to add the two amounts together, which equals the monthly amount. For whatever reason, if both of you pass away on this option, it's both prior to 12 years. So not necessarily at the same time, just prior to 12 years. Then whatever's remaining in your account will be payable to children or to someone or to a trust in a lump sum. So again, whatever you're receiving at the time of your passing, spouse, because the spouse is both the beneficiary and survivor, they're going to receive the same exact amount. If you both pass away prior to that 12 years, then whatever's in the account is protected, payable in a lump sum to whomever you choose, trust, children, or to whomever. If you guys both pass away after that 12 years, then of course, there's nothing payable to those beneficiaries. It's just prior to. The next one works similar, but a little bit different. So 100% beneficiary with allowance increase. So this person's going to receive a little bit less per month. Again, their spouse is going to receive the same exact amount. But for whatever reason, if their spouse passes away prior to you, the member, then your benefit is going to go to your unmodified allowance. So again, you're the member, you're getting 2205, you're retired, now your spouse passed away before you do, your pension has a pension increase. The only thing with that one is if both of you died prior to 10 to 12 years, then any remaining balance stays with CalPERS. It does not get paid out to anyone. So it's like I was saying, it's similar to the 100%, but it's a little different. You also have your 50% options. They both have exactly like the 100%, but these are 50%. So the first 50%, whatever you're getting when you pass away, they're going to continue to receive it's usually around 50 to 60%, depending on your employer's contract. The survivor continuance makes it a little bit more than 50%. If both of you pass away prior to 10 to 12 years on the first 50%, then whatever's remaining in the account is payable in a lump sum to children or to a trust. 50% beneficiary with allowance increase, you're going to receive a little bit less per month. They'll receive around 50 to 60% of your pension. And then if this person's spouse passes away before they do, they go to the unmodified allowance, and then the return of remaining, anything left over if you both pass away, stays with CalPERS. So your key is that anything that says with the allowance increase is the indication that whatever's remaining in your account balance, if both of you died, stays with CalPERS. You also have your flexible beneficiary specific percentage. You also have your flexible beneficiary specific dollar amount. So if you didn't want to leave 50% or 100%, you just wanted to leave, I don't know, 30, 40%, you can do that. The only thing with these type of options, you're tailoring it to your needs. So if both of you passed away, then whatever's remaining in your account balance will be stay with CalPERS. It will not be paid out. You can choose where you have multiple beneficiaries. These are the only two options that allows that to happen. So let's just say that I'm retiring. I have two children. I want them both to receive a monthly benefit for the rest of their lives. I can do that for them. But it has to be either specific percentage that I'm electing for them or specific dollar amount. Where on all the other options, that's only for one person. Now, you can split it apart where your beneficiary is a different person than your survivor, if you want to get a little bit more technical about it. But that's where you're going to run different retirement estimates to see which suits your guys' needs the best. There's no right or wrong option. It's just whatever best fits what you guys need to live off of now and what your beneficiary survivor will need to live off of once you pass away. There's a lot of members that come in and say, okay, well, what option should I choose? Well, we can't tell you what option to choose because remember, this is whatever you guys need to be able to survive off of per month. The way that I kind of counsel our members when they come in is they'll say, okay, well, where am I breaking even at, right? Or am I making more into retirement than I am working? So the easiest way to look at this is to take your net check, what you're bringing home. If you look at your retirement pension and it's $300 more than what you're bringing home in your net, then you're making more into retirement. If it's breaking even, but you want more, then look at your birthday quarters to see where you could get more of a benefit. Where can you maximize your benefit at that point? So again, there's no right or wrong option. It's just whatever best fits your guys' needs. So I'm just going to quickly show an estimate with no survivor continuance because there could be a couple people in this class that don't have a survivor. So the options are going to be the same for you. It's just on yours, on this survivor continuance row, it's going to be 0. As you can see, it's 0. So you still have the same options. Unmodified is just going to be your highest benefit. You get that until you pass away and then it ends. Return of remaining contributions, whatever's remaining in your account is payable in a lump sum. If you surpass that 12, 13 years, then your beneficiary just doesn't get anything. You could choose a person to be your monthly beneficiary without being married to them. This beneficiary, remember, can be anyone you want. It's that survivor that's set by state law. So if I came in, this is me, and I wanted to list my daughter to get a monthly benefit, I can do that at 100%. Yeah, I'm going to take less money per month, but then she's going to have that benefit for the rest of her life. So, that's where, you would be able to say, okay, well, I can afford that. I can take that reduction to retirement for this person to receive that for the rest of their life. So that's why we can't say what option is best for you guys because there's so many different ways and different scenarios that you may come across that better fits your needs than your next door neighbor or your best friend. So that's where, run those retirement estimates, run them off your birthday quarters if you still have them, and that's where you're going to maximize your benefit. So we could just kind of quickly glance at these. Again, you'll just see the survivor continuance row will always stay 0. Same options though. On the retirement estimates, I would highly encourage you to make a MyCalPERS account if you have not already done so. You're going to be able to get the most accurate results from CalPERS by logging into your MyCalPERS account and doing the estimates through there. Now, remember, this is only through payroll of what your employer has currently reported. Most employers are a little behind. So right now, payroll is supposed to be up to date, but sometimes some employers lag behind. So we've been noticing that the payroll is only up to like maybe December. So keep that in mind. That final compensation period, that final compensation number that's on that estimate calculator, I would not change that. That's designated to grab exactly what your employer has reported to CalPERS. Yeah, you may be getting a pay increase in the future. Yeah, you may have gotten a pay increase, but just remember that that calculator is working backwards. It's not working to the future. So the closer you run an estimate to that retirement date, then a little bit you're gonna see that that estimate is gonna be a little bit more. Create and save multiple estimates, then that way you can compare, well, I use this person as my beneficiary, I didn't use a beneficiary on this one. Compare the two. If you have a survivor, when you come up to the question, do you have a survivor? And if you have a survivor, you need to make sure that you're marking yes. There's a lot of instances where our members have survivors, but they're not putting yes, and then those estimate results are not correct for your situation. So again, just make sure that you're understanding that you're using the calculator properly. We're just going to take a quick dive into the retirement estimate calculator. You're going to start, once you get it logged into your MyCalPERS account, you're going to go to the retirement tab, retirement estimate calculator, start a new estimate. This person is just going to use the earliest estimated retirement date. And then the final compensation already pre-populates. Your current work status. Now, this is the sick leave. So again, only if your employer contracts for the sick leave conversion is when you're going to mark a yes on this. If you don't know, I would find out with your employer first and then come back and do a new estimate. Because remember that sick leave conversion is going to give you more years of service credit, which will give you more money per month. So you don't want to be adding sick leave if your employer does not contract for it. This is that survivor continuance. So if you have a survivor, you need to make sure that you mark yes on this. How many beneficiaries do you want to include? So let's just say that you want to see it for your spouse or a registered domestic partner or child or whomever. So you need to mark at least one beneficiary on here. We're going to need their date of birth. And then you get your final estimate results. These estimate results are pretty close to what you're going to be receiving, but like I said, it's just through the current payroll of your employer of what they've reported to CalPERS. I would say give or take about $50. If I were retiring and I was using this retirement calculator, I'd feel pretty comfortable using it. You could also submit a paper form if you want to have it submitted to you. But that will be sent to you by mail. Same results, but it's just whatever your comfort level is. You could also see it as like 6 months more later, a year later, 2 years later, so on and so forth. My personal experience with the calculators, I always just like to save the estimate that I'm currently on and start a new one instead of doing this 1 year out, 2 year out, 3 year out. But that's just me. Sometimes if you do estimates that have multiple beneficiaries, the numbers can get a little messed up. So that's what I'm saying. Save your estimate, go back into the estimate calculator and start a new estimate instead of recalculating off of. Sometimes the system doesn't calculate it properly when you have the multiple beneficiaries. So again, save the estimate, go in, start a new estimate, and get those new results. And this is where you would save the estimate. It's a little bit down under the calculation details. This calculation details banner. So after you get your estimate, there's going to be a calculation details banner. It does not look like you could click on it, but you can. Once you hover over it, it will change to blue. If you were to click on that, it's going to give you all the calculation details of that estimate, your retirement date, your years of service at that date, who your beneficiary is on that estimate. So again, the calculation details is going to give you all that information. I know it does not look like, again, that you could click on it, but you can. That's going to give you all those details, what you're looking for. Because if you're trying to aim for 20 years, 25 years, 30 years, whatever it is, when you get the results, it doesn't tell you how many years that you have, not unless you click on the calculation details, and then that will provide that to you. You can name the estimate anything you want. The name of the estimate is just for you. What we see is just that you ran the estimate on a certain date for a certain time, on a certain date for your retirement. We don't see the name, so you can name them anything you want, does not matter. And then under your save estimates, this is where all your saved estimates are going to be located. So you can start an estimate letter, but I'm going to explain to you really quick is that estimate letter is just these results printed out, mailed to you. If you want, so it's not necessary that you do that. Because you have the estimate results, you can just print it yourself. If you feel more comfortable, you want to do that, you can, but you don't have to. It's the same thing. It's just going to be mailed to you. And then this is when you request that letter, this is where it's going to be located. So it's all under the retirement calculator. So it's important that you follow up on the information that I've provided to you. Log into your MyCalPERS account, review your retirement information, save and review all the estimates that you have, and determine which option works best for you. I'm going to go ahead and go over the retirement, post-retirement lump sum death benefit. So this is in addition to what we just talked about. The retired lump sum death benefit is payable once you pass away. The amount is payable upon your employer's contract with CalPERS. The minimum is $2,000 for most members. It could be up to 600, can be 600 to 5,000 for public agency and school members. So again, it's based off your employer's contract. Most everyone's at 2,000. If you have worked for more than one employer, CalPERS employer, the highest benefit will be payable. So again, this is in addition to what we just talked about. This is a one-time payment. It's called a retired death benefit. This is payable when you submit your application. You're going to select a beneficiary to receive this benefit. Now, if you have any life events, you would need to make sure that you update your retirement death benefit. So if you got married or registered in a domestic partnership, dissolution of marriage, or birth or adoption of a child. So any of these will revoke what you currently have. So you always want to make sure that all your beneficiary designation forms are updated. Once you retire, this is what it's going to look like. It's going to tell you who your beneficiaries are, what option you chose, and you can also add or change your beneficiaries for the retired death benefit. The retired death benefit is a lump sum, so that beneficiary can be changed at any time. It's just your option. Once you select your payment option, you're retired and you're getting your monthly benefits, that monthly person cannot be changed, not unless you had a qualifying event. Qualifying event would be like their passing. So let's just say that I had a beneficiary, they passed away. I could rename a new person, but then my pension is going to be recalculated off of that new person's date of birth. So there's a possible of a decrease to my benefit if that were to happen, because we're recalculating the pension. If there is a death of a survivor, beneficiary, or dependent, we would need a copy of their death certificate, and they will, of course, be removed from the health or dental plans. You could also be so if someone has passed away, like a beneficiary or a member of CalPERS, anyone can report the death of a CalPERS member to CalPERS. The only information that we'll need is the following: name and social security number of or CalPERS ID of the deceased, their date of passing, information about their surviving spouse, domestic partner, close of next of kin, or executive of the estate, and information on person providing the notice. You could also report the death online, and then that will take you through the application process. And then Derek, I wanted to chime back in with you.
You did. Okay. So yeah, we do got some questions here, of course. Um, if your spouse passes away, are you able to change your lifetime beneficiary? Yeah, so really that's one of the few times you actually can change your beneficiary. So when you apply for retirement and you pick your retirement option, it's irrevocable 30 days after we issue your first pension check, unless you have a qualifying event, which is death, marriage, divorce. Those are the only three times we allow you to change your retirement option after that 30-day time frame. So yes, death of a beneficiary. Yeah, you could change the beneficiary, or if you got married while you after you retired, yeah, you can change your option. Or if you are married when you retired and you got divorced, yeah, we'll let you make changes then. Those are the only three times you're allowed to make changes. I've been getting a lot of tax questions, which we get into later. Yes, this pension is taxable by federal and state, and you will indicate that on the application. And this can be changed anytime during retirement. So whatever you put on the application is not set in stone. Survivors can only be 4 people by state law. That can't be changed. And it is in that specific order. So if you have a spouse and a disabled dependent and you pass away, your spouse will receive the benefit until your spouse passes away, and then it could pass on to the disabled dependent. Definitely. Let's see, there's so many in here. Let's see here. I'm trying to pick the ones that would affect, most people in here. If you didn't have a survivor and you got married after retirement, that individual cannot be added as a survivor. The survivor law is the spouse, you have to be married at least 1 year prior to your retirement date. So if you got married after you retired, yeah, there's still no survivor. Yeah, beneficiaries can be anybody. So a lot of people do pick their spouse as the beneficiary, and the spouse is automatically the survivor by default. So the spouse would get both payments if you pass away first. So let's see. You can retire any day of the year. It doesn't have to be at the end of a fiscal year or a calendar year. A lot of people like to retire on their birthday because they get that birthday bump or a birthday quarter. And you can retire on a weekend. It doesn't have to be a weekday. Beneficiaries are not automatic. You do have to name them on the application when you apply, especially if it's a lifetime beneficiary, because there's lifetime beneficiaries and then there's lump sum beneficiaries. You will name all these individuals on the application. Lump sum beneficiaries can be changed anytime during retirement because it has no bearing in the calculation of the pension. As far as the taxes, yeah, I mean, this is taxable. You can elect to have us take out federal and state for you or not. This can be updated anytime during retirement, but this is taxable by federal and state. And whatever you put on the application can be changed anytime during retirement. As far as rolling over unused leave, yeah, I've seen over the years where you can roll over any unused vacation annual into Savings Plus. Yeah, that's set up through the employer. CalPERS doesn't get involved in any cash outs or rollovers of leave balances since we have no access to that. Let's see here. Yeah, that'll be good for now. That'll be good for now.
Perfect. Thank you, Derek. So we're kind of at a little halfway mark in our class. So I always like to take a little break, let everybody kind of stretch your legs, get coffee or water, a little quick snack, whatever you guys need to do. So let's see here. It's 10:05. We still have a good amount of time in this class. So let's do be back by 10:20. So 15-minute break. And then we'll continue our class. Oh, wait, just a couple more minutes just to make sure everybody gets back and logged in. All right, so we're gonna go ahead and finish off this class. So the next section that we're going to go ahead and talk about is your cost of living adjustment, which is considered your COLA. COLA is a cost of living adjustment that may increase your pension in retirement. COLA is based off of the consumer price index for all urban consumers in your employer's contract. The minimum is 2%, but some employers do contract for 5%. And just remember that the COLA is not guaranteed. And many of you are probably like, what do you mean the COLA is not guaranteed? So again, it's based off the consumer price index, the economy. So if that's a little on the lower side, then the COLA may not be as great or up to 2%. So remember, the COLA is all the max of the COLA, depending, of course, on the formula that you're or the employer's contract, but usually it's 2%. It's up to 2%. So let's say that the COLA is 1.5%. You're going to get the 1.5 because the threshold is 2%. So just so you guys are aware of understanding of how it actually is calculated. So depending on when you retire, if you retire anytime this year in the year of 2025, your first COLA will be May 1st of 2027. If you retire anytime in 2026, your first COLA will be May 1st of 2028. So yes, one day does make a big difference. Now, most people think, well, if I retire at the end of the year, I'm going to get my COLA before anyone else. Well, you're not really going to get your COLA before anyone else. It's just you've been working the entire year. So basically that's your waiting period that you're waiting the same time as everyone else. Well, you're getting it the same time as everyone else. So again, 2025 retirees, first COLA May 1st of 2027. 2026 retirees, May 1st of 2028. Power of attorney. So CalPERS does have the CalPERS special power of attorney. I would highly suggest, if you have not done so, I would highly suggest you to get it on your account. The power of attorney can act in many different ways. We always talk about, what if there was an emergency situation? CalPERS is not legally able to act on your behalf if you don't have a power of attorney on file and approved. Yes, we do take outside power of attorneys also. So if you have one already established, some people get it with their trust. If they set up a trust, they have a power of attorney that's connected to it. So you can submit an outside power of attorney. Now, those do take a little bit longer to be processed than the CalPERS power of attorney. So also just kind of keep that in mind. A power of Cal, so the special power of attorney from CalPERS, we do not use that to make medical decisions, provide authority over real or personal property. It cannot be used after your passing, and this does not grant your power of attorney to access your MyCalPERS account. So your MyCalPERS account is specifically for you and you only, and not for your power of attorney to be logging in for you. Why is this form important? So again, like I was saying, emergency situations would be one scenario. That power of attorney can also help you change your address. They could submit a retirement application, select your payment option. So again, that's, another important factor. If a family member needs to get you retired due to your HIPAA related condition or whatever is happening to you, then we are allowed to help them in that application process. They can even help designate your beneficiaries. They'll be able to request information regarding your retirement checks, change your tax withholding, change your health plan. So there's many things that you are able to do as your own person that your power of attorney is able to do also. We have a little bit of extra information here. This is what the power of attorney looks like. So section 1, again, that's just your information. Section 2 is who you want to designate as your power of attorney. Now, if you designate more than one person, you need to mark whether they're going to act jointly, separately, or alternately. Section 3 is what you want them to be able to do or not to do. So it is or is not on both sections. Section 4 is when you want it to become, when you want it to be used or when you want it to be in place. Most people just put the first box, but again, it's really up to you. Section 5, we don't need your power of attorney signature any longer. It's still on the application though. Section 6, you're the principal. This is where you're going to be signing the document. And when you sign the document, you need to sign it in front of either 2 witnesses over the age of 18 or a notary. Either or of the 2. The next section that we're going to go ahead and go over is the retirement process. So your retirement process, of course, you attended a class today, and thank you for joining us. You want to make sure that you register for your planning-Calpers account. Generate any retirement estimates, be familiarized with the options and how they best work for you and your family. Discuss your retirement plans with family. Maybe, if they've already retired, they have like some tricks or trades or whatever they want to share with you. If you have a financial advisor, you would definitely want to talk to a tax person before you submit your application. On the application, there's a section for taxes. That section we are not able to help you with. There's a lot of confusion when members come in. They're like, well, I don't know what to elect. What should I put down? We do not know. We're not tax advisors. We do not know what your tax liability is. Whatever you put on your tax liability, you could always change that later. So if it's not enough or too much, again, you could change it later. Go through your retirement application, be familiarized with it. Download a hard copy, from the Forms and Publications Center and print it out and go over it. Check with your employer regarding continuation of other benefits such as health, dental, or life insurance. So that's another step that you could talk to your employer about. So when choosing the retirement date, always remember your birthday quarters if you have room to grow in your age factor, your final compensation, and your cost of living. Those are pretty much the 3 main factors that we would always want you to be aware of. When completing your application, your retirement date must be at least 1 day after your last day on payroll. So if today is your last day on payroll, your retirement date will be tomorrow because you cannot get paid for work and paid for retirement on the same day. If you have a spouse or registered domestic partner, signatures must be either notarized or witnessed by a CalPERS representative. Additional documents that may be required, such as beneficiaries' birth certificates and marriage certificate. Remember that your option is irrevocable 30 days after your first retirement check has been issued. So if you need to make any changes, that needs to happen prior to 30 days after you get your first check. Again, tax withholding. So that's why I was informing you of the income tax withholding. It will be the regular federal and state taxes that will be taken out. Again, you would need to make those decisions on your application. When submitting your retirement application, you're able to submit your application 120 days prior to your retirement date with CalPERS. You could submit online, by mail, or at your nearest regional office. Shortly before you receive your first check, we'll send you a letter providing you with the details for your date of your first retirement check, your monthly retirement income, and any tax income. Health benefits information will be sent in a separate letter, but that's only if it applies. A little bit of tips for you. Complete all service credit purchases. Resolve any issues that you have with CalPERS regarding community property cases and home loan defaults. Submit your retirement application process. Submit your application timely. So again, we allow our members to submit their application 120 days prior to the retirement date. It takes about 30 to 45 days. A person can come in today and say, hey, I'm retiring today today's my last day on payroll, I'm retiring tomorrow. That's completely fine with us. However, it's going to take at least 30 to 45 days to get your first check. Yes, it will be backdated to your retirement date. So if you're completely okay with that, then CalPERS is okay with that. We just need to make sure that you're aware of our processing timeframes. Now, you do have the option to work after retirement, and many of you are probably like, what the heck? No, I'm trying to retire and not work again. Um, but there is an option where you could work after retire. Now, if it's a CalPERS covered agency, you have to wait at least 6 months to return to work again. The position has to be part-time, non-permanent, and you could work no more than 960 hours of the fiscal year. So again, you're waiting 180 days before you return to work. Position has to be temporary, and you can work up to 960 hours a fiscal year. If you return to work as a retired annuitant, and if you are under normal retirement age, there might be additional restrictions. Bonafide separation of service, that's an IRS law. Retire younger than normal retirement age has two conditions. No verbal or written agreement before you retire. And it has to be 60 days between your retirement date and date of employment begins. There are exceptions where it's state of emergency, but your employer will need to get that exception cleared. You could apply for any temporary positions directly through your employer. The employer decides whether or not to hire you. You must inform your new employer that you are a CalPERS retiree, and your compensation must be within normal range paid to employees performing comparable duties. There are times where there's unlawful employment that happens. If your employment violates any rules or state laws, it can result in a mandatory reinstatement from retirement, retroactive to the date of your unlawful employment began. Make sure that you read over the employment after retirement employment after retirement information in publication 33. That will give you all the rules and regulations that you have to abide by if you choose to work after retirement. You could also reinstate from retirement. You then become an active member again. You earn more service credit, and yes, you could retire later at a later date. Now, you want to be very careful with when you reinstate from retirement. That may put you under the new Pension Reform Act, the new formulas. So you could easily be a 2% at age 55. If you reinstate to a different employer, that could also put you under the new formulas, 2% at age 62 or whatever they are out there. There's so many different ones. So again, just be familiarized if you did decide to reinstate what you're reinstating to, and make sure we're going to go over health insurance soon, but that could also affect your health insurance. If you return to work as a reinstated CalPERS member, you have to have a position that is full-time or permanent or expected to last more than 960 hours a fiscal year. You need to have a firm start date or hire date from the employer. And a reinstatement from retirement publication 37, you could review that for additional forms and information. So understand there's restrictions before taking a position. Know the number of hours you could work and reinstate to a permanent position. If your employment has nothing to do with CalPERS retirement, so let's just say that it's a private industry or something like that, no CalPERS retirement, you could start work the very next day and have no restrictions. So again, the restrictions only happen if it's a CalPERS covered employer. Online resources. So we do have a lot of online resources for our members for them to review. This is our newly designed website. So if you're newer to CalPERS, if you have any life events, you want to do your retirement, health insurance, and paydays, on the top, there's going to be your home button, members, retirees, employers, and investments. Once you click down, this is where the hidden, I kind of like calling it the hidden menu because you can't really see it until you click on whether you're a member, retiree, or employer. This is where all the additional information is, where you would be able to click into these links, and then it will take you right to that section. again, retirees. Our education videos we have, so I don't know if you've ever been on our YouTube channel. We do have lots of little snippets of, just pertaining to certain subjects that CalPERS that we talk about, like say, like for instance, on this page right here, we have information about an education events, quick tips about cost of living. If you want information regarding service credit purchases, how to retire, what it looks like when you're retiring online. So we have a bunch of different videos that I would highly suggest you to look at if you have not yet, and it's just a CalPERS YouTube channel. We even have we even have news and events. So this is all of the information regarding CalPERS and the events that are happening. This also tells you about our more board meetings. Our perspective that used to be mailed out to our members is now all online based. You could subscribe to get it mailed to you every time it comes out. The CalPERS fact. So again, this is the CalPERS pension buck that we went over earlier. If you're new to CalPERS, you could click there, it'll give you additional information. Once you sign up for your My CalPERS account, if you have not done so, or if you have done so, of course, this will look familiar to you. So on the top, you're going to have home, retirement, health statements. You're going to have your education tab. On the right-hand side, my account, this is where you're going to get all of your personal information, including your CalPERS ID number. You could update your contact information here. Your username. Now, if you need to change your username, of course, it tells you on the screen right here, but I just like to always inform our members or remind our members, if you need to change your username, just give us a call and we could change it over the phone for you, or we could change it in person for you. And then you have your password where you could change. Multi-factor authentication information, mailing preferences. This is where you're able to send a message to CalPERS or your My CalPERS account, and then we will be able to respond back to you right through your account. Retirement estimate calculator. This is what I showed you guys earlier. Health plan. So health plan summary guide. This is where you're going to receive your all information regarding your healthcare costs. Statements. This is where all your statements will be located as an active member. Education. So this is where you would be able to make that next appointment. You could take more classes if you want. This is where you would be able to download all of our publications. If you wanted to visit a regional offices, this is where we're located: Walnut Creek, Sacramento, San Jose, Fresno, Glendale, Orange, San Bernardino, and San Diego. Before making an appointment with the regional office, you should attend a class. Again, thank you. So that's what we're doing today. Schedule your appointment in advance. Complete all your forms. Complete all your forms to the best of your ability. If you have questions or concerns, write them down. So then when you come in, you're ready to go and we could dive right into your questions if you have any. Have your retirement estimate done, or you could always log into your My CalPERS account, make sure you have your username and password. If not, we could always help you reset it. Again, write down your questions. And then that way, when you come in, you're a little bit more prepared, and we're not searching for things to talk about. We like our members to be prepared when they come in. So then that way we can make sure that we help you with everything that you have in mind, or whatever your concerns are. So health insurance that I'm going to go over, it's mostly for state employees. However, any health insurance questions, if your employer regarding school or public agency, if your employer contracts for health benefits into retirement, it's pretty much, whatever they're going to pay for, and then you pay the difference. To be eligible, again, your employer must contract for health benefits with CalPERS. You have to retire within 120 days of separating from your CalPERS employer. You must be eligible for health benefits on the date of permanent separation, and you must be receiving a monthly retirement check from CalPERS. So the vesting requirements that I'm going to go over right now is for state members. It's based off of the date you were first hired by the state, the amount of service credit you've earned, and your employer's memorandum of understanding. If you were hired before January 1st, 1985, the state will pay 100% towards your 100% of the state's contribution towards your health premium into retirement. If you're hired between 1/1 of 1985 and 12/31 1988, then it will be prorated. 10 or more years will give you 100%. Anything less than 10 years will be prorated. And if you're hired on or after January 1st, 1989, if you have less than 10 years, you won't get any of the state's contribution rate. You have to have 10 years to get at least 50%. 11 through 19, 50% plus a 5% for each additional year over 10. 20 or more years, it would be at 100%. So remember, what we're talking about is the state's contribution rate. That does not mean that your health insurance is going to be fully covered, because it depends on what plan you're under, how many people you have on your plan, what the cost is, and what the state will contribute to that. So let's just say, for instance, the state will contribute $1,000 to your plan. Well, let's just say your plan's $2,000, so you'll pay the difference between the two. There are some plans that the state contribution does cover the full amount, but again, we could help provide that information to you during your counseling session. Now, if you're a new hire, some have a different vesting requirement that requires you to have 25 years of vesting. So in this situation, less than 15 years will give you 0%. 15 through 24, 50% plus 5 additional for each year over 15 years. 25 years or more will be 100%. You could change your health plan during open enrollment upon the following quality events. If you move or have a enrollment into Medicare. You could add dependents to your current plan upon the following qualifying events: marriage or domestic partnership, birth of a dependent or adoption, or involuntary loss of coverage. Dependent coverage, your dependents may include spouse, registered domestic partner, children up to the age of 26, certified disabled dependent children over the age of 26, and children up to the age of 26 where a parent-child relationship exists. Now, under retirees on the CalPERS website, under retirees, this is where you're going to find the plans and rates. On our regular CalPERS website, the health plan zip code by search by zip code is always very good to have, especially if you're thinking about moving, so you could pre-plan and see what health plans are available. The 2025 health plan summary guide is also good to go over, and also we have the program guide. You could use the health calculator into retirement in your MyCalPERS account, and then that will show you exactly how much you're going to have to be paying. Now, it doesn't do it for the future. It just does it within the current year, because we don't have 2026 rates yet. So again, you could kind of get like a roundabout figure of approximately how much you would be spending for your medical. And this is what the zip code tool looks like. This is the health cost into retirement that I was just referring to. Next steps. So it's important to follow up on the next steps. Important to follow up on the information I just provided you on your next steps. If you're a school or a public agency, contact your employer. If you're a state or CSU, review where you fall for health vesting. Review and use the health tools and resources in the MyCalPERS that I just went over with you. Now, many of you are probably asking, so for state members, dental and vision will continue into retirement. Those are new enrollments that you'll have to do with your human resource department. When you let them know that you're going to be retiring, they'll have exit paperwork for you to complete. Again, for state retirees, dental and vision are new enrollments that you'll do with your human resources. Health insurance will just automatically roll into CalPERS retirement. The class summary for today. So we talked about different income sources, how your retirement is calculated, ways to increase your retirement. We went over your options and lump sum death benefits, your COLA, which is your cost of living adjustment. I went over information regarding working after retirement, and we went over your MyCalPERS and additional web resources. I hope you enjoyed today's class. Once we close out the class, you're going to receive, this is also the QR code for today's booklet. Once we close out the class, you're going to receive a separate email. And in that email, it's going to have the evaluation for today's class. Whether you liked it, what things you want to change, anything and everything is good information for us to go on and be able to maybe possibly change classes in the future, or just make little adjustments that we need to. And especially for me, as being the presenter, it's always good to know that information. So again, thank you for attending. And then we're going to be in here for a little bit longer, and I'm going to turn it back over to Derek to answer a little bit more questions live.
Yeah, definitely. Yeah, and if you guys just want to keep bringing them into or keep submitting questions to the Q&A feature, be happy to get to as many as I can here. Can you enroll in health benefits after retirement? Well, retirement is also a qualifying event to enroll. So if you decide you don't want to enroll at retirement, you want to come back and you're eligible for it, yeah, you can at open enrollment or any other qualifying event. Yeah, you definitely can. So this is actually a good one. If my disabled son is a beneficiary of my pension and is also a dependent on my health care, once I pass, can he still be on the health plan for a lifetime? Yeah, so this also goes for spouses as well. As long as the individual is eligible for an ongoing monthly payment from CalPERS, yes, the disabled dependent and the spouse can keep the health benefits with your vesting rights. But you have to be eligible for an ongoing monthly payment from CalPERS. That's the key. That's a good question. Is CalPERS involved in health benefits after retirement? Well, yeah, if your state or CSU, it's automatic. A lot of agencies do contract with us for health and retirement schools. Some cities, some counties do. Our partners able to receive health benefits. It's a registered domestic partner. Yeah, definitely. I mean, we would need to see, proof of that though. But yeah, definitely. Registered partners are able to receive health benefits. Yes. Let's see, is this a video be available at a later date? There is a lot of info, and rewatching this multiple times definitely would be helpful, and a lot of people do that. So a lot of these videos, we have a YouTube channel with a lot of these videos on there as well. Another way to watch them is if you logged into your CalPERS account and you're on your home screen, there's the tabs going across the top. One of them is education. Under the education tab, you can watch these videos at your own pace. And it does save your place because sometimes people can't sit through, a couple hours of these videos. So yeah, there's a couple ways to watch them under the education tab if you logged into your CalPERS account or on our YouTube channel. If you're a designated guardian for a disabled relative in the event of their guardian's death, how do I add him or her during retirement? Disabled relative? I mean, it depends if this disabled individual is a survivor or a lifetime beneficiary. I've seen payments go to an individual in care of, or to a guardian in care of this disabled individual. I've seen that over the years that I've been here. So I have seen that, but I'm not really sure exactly what you're trying to say here. But I have seen a child as a survivor or a beneficiary, and there is a guardian. And I've seen, like I said, I've seen the payments go into an account where there is a guardian in for the benefit of this disabled dependent. So I hope that answers your question. Let's see.
There's no fees for our CalPERS power of attorney. It's just you
Yeah,
completing
for
the
the power of attorney,
document.
we
Yeah, it's
don't,
just you completing the document, and then you either have two witnesses. You could come into the office, and we could witness your signatures there. You could have it notarized, but there's no fee for our power of attorney.
yeah, we
It's
don't
free.
charge anything. After 20 years of service, partners would receive health benefits at 100% too, as long as they are eligible to receive an ongoing monthly payment from CalPERS. Yeah, definitely. But like I said, if it's a registered domestic partner, so CalPERS will want to see proof of that. So yeah, definitely. Um, I started in 2010 part-time, I went full-time in 17. Now I have 8.5 years, full-time credit. How do I buy service credit? How do I utilize the buying of service credits? Well, you wouldn't be, you can only buy service credit as prior to your membership date. So if you didn't become a member until 2017, but you worked part-time in 2010 and you didn't get credit for that, that would be considered service prior to membership. And you can do that through the online calculator. Well, through the online service under the retirement tab, there's a service credit purchase, and this would be considered service prior to membership. So that's how you would get the cost of service prior to membership for trying to buy that service credit. I think that's what you're trying to ask me. The minimum number of years of service needed to have health benefits through CalPERS. I mean, it depends on when you started, like when Angeline was going over the graph. So for most of us, it's, you'd have to get at least 10 years. I mean, depending on your start date. So 10 years gets you the minimum amount. So
10 or 15.
yeah, 10 or 15, depending on when you started. I mean, 15, that didn't come into effect till when, Angelina, was like 2019 or something like that.
I think so. I
I
don't
can't,
have the date with
yeah, I don't
me.
really have it off the
Darn
top of
it.
my head. It depends on the start date. So if you're almost at 5, yeah, it sounds like you are subject to the 15-year minimum vesting
It kind of
for
sounds like it, yeah.
10 years. So, or for 15 years.
15
So
years.
yeah, you'd have to get 15 to get at least 50% of the health vesting. Is the date of separation or retirement date used for the last 12 months of the salary? Well, we look for your highest 12 consecutive months in your entire career. And most people, it is the last 12 months of their career, but it not always falls into that category. Because the separation date is the day before you retire. So
Mhm.
most people, it is that last year. And since your employers report your salary to us every pay period, that's why we're able to run accurate estimates on the calculator. So um, the date of separation, yeah, because if that's your final, if that's your highest year, then we'll go from the date of separation in the previous 12 months. Return of remaining contributions is, I'm not sure what you mean by remaining contributions, 100% beneficiary, 50% beneficiary. Um, those are the only 3 options that pay out contributions if you pass away before they're used up. I think that's what you're asking. Those are the only 3 options that do pay out unused contributions. Um, for unit 7, I don't really know. I'd have to look that up. Because it depends on when you started as well. So for bargaining unit 7, yeah, it depends on the start date. I mean, we can always answer that if you had an appointment or called in. I don't know all the bargaining. There's so many bargaining units and
Mhm.
start dates. It's just too hard for me to guess on that one. I don't want to guess. If I'm at 2% at age 55, does that mean I will not start receiving retirement payments till 55 if I retire at 50? No. So if you retire at 50, you start receiving the payments at the date that you indicate on the application. So if that's your 50th birthday, then that's when you're going to start receiving them. Although you'll get a lot less at 50 than you would at 55. If you wait till 55, it practically doubles. My highest earning was 4 years ago. Does a retirement calculator base the retirement on my current salary projecting forward? It's based on that highest, well, if
Whatever the highest.
it's whatever the highest year is. Since the employer inputs your salary every pay period into the same program that we use every day here at CalPERS, the online calculator pulls that information from the internal program. And that way we can run accurate estimates. So whether it was 4 years ago, 1 year ago, or 10 years ago, that's the salary that will be input. And it should reflect on the second screen of the calculator when you're running an estimate. You are welcome.
So I'd say we'll probably see in just a couple more minutes.
Is CalPERS invested in prison labor? Not that I've heard of.
Mm,
Um, no, they're very particular about what they invest in. They don't want to upset any of the stockholders or the public, so they're very, very particular. I would have to say no, but I don't know for sure. But I mean, I'd have to be like 99% sure they don't. If I started working with the state in June, working through March, the following year would give me 1 year of service credit. Um, well, you did earn service credit for that first month in June, and then it resets every
in
fiscal year.
July.
So, yeah, because not everybody starts on a fiscal year. I mean, I didn't, of course. So if you started working in June, you got credit for that, if it was the whole month of June or whatever, that partial month of June. And then it starts over again July 1st. So then it's July 1st through April 30th would be a year. So yeah, technically through the end of March, you'd have a year at that point. Correct. Thank you. We like the thank yous. Well, unified school district, it depends. I mean, are
They're
they
usually under
Cal?
CalPERS or
Yeah, are they
CalSTRS.
CalPERS or what are they under? Because a lot of school districts are already under CalPERS. So it just depends on the school district and SFUSD.
It should be under CalPERS.
They should be already a CalPERS employers. I mean, there's so many employers. I mean, even as many years as
We don't
Angeline
know.
and I have been here, it's even hard to keep track of what agencies are and aren't. But as far as I recall, SFUSD should be a CalPERS employer. But I mean, we can always confirm that just by looking at your account. So, anybody at the call center could say, hey, if you worked at SFUSD, was it reported to CalPERS? Yeah, we can look into that. It's not a problem. For health vesting, I have 23 and a half years of service at CSU. Does health continue for me and my husband? Yeah, definitely.
Mhm.
Yeah, yeah, that's a lot of years. So yes. We love all the thank yous. We appreciate
Oh,
that. It's a lot of information we got to
that's a
cram
lot of
into a
information. And
short
we
period of
had a
time.
pretty good class, big class today.
Yeah, over 100 people logged in. So you
Yes.
guys kept me really busy with the questions. That's for sure. Is your final compensation based on gross or net? It's gross. It's your contracted salary. So we go by gross, not net. That's a question we get all the time here. Is the
SF
reciprocity already calculated? No, you have to establish it. So if
Okay, Kristen just answered SFUSD is a CalPERS employer.
okay,
Yeah.
so we have
So
somebody
you don't
looking
need
this
to
up.
establish reciprocity.
You
It's
don't
already
need
part of
to, yeah,
CalPERS.
you won't need to do that. You won't need to establish reciprocity. I didn't think so. I
Yeah,
figured
I
they
didn't
were a
think so
CalPERS
either.
employer.
My retirement calculation was 2.555, but I plan on leaving my employer this year. 952 is a calculation percentage higher if I wait. Yes, the calculation will be higher. It'll be 2.5.
Right. If
It'll
you
be
under
lower than
55 and you collect a 52, it goes down every birthday and birthday quarter. The benefit factor charts are on the website. So if you go to the CalPERS website and don't log in and you go under what is it, active?
yes.
Yeah. Then the drop down menu will appear and you can click on the benefit factor chart on the link and see what the percentage is.
Mhm.
And the online calculator automatically knows your birthday benefit
Younger.
factor and birthday quarters. It knows all that.
Perfect. Good to know.
Oh, thank you.
Oh, thank you guys. I'm glad you guys thought it was useful. Oh, that's great to hear.
Right.
Just because it's a 2.5 hour long class. Well, I give it just like a couple more minutes and then we'll log out for the day. So if anybody else that is still in here wants to submit another question, we are here. Oh, thank you guys. Ah, you have a good weekend too. It's already upon us again.
Thankfully. The CalPERS calculation does not seem to include any of my service
Hmm.
years.
Let's see, your name's Nicole. Let me see. Let me try to look it up real quick.
Yeah, I mean, I wish I could
I'm
see
gonna
more on your
pause for a
account.
second.
Um,
I'm gonna try to look up your account really quick, Nicole. Just give me a second here.
yeah, that's a tough one to answer without actually seeing it.
Yeah, Nicole Summer. Let's see.
Self-employment does not affect CalPERS retirement, but could affect Social Security retirement. I can't answer for Social Security, but if you retire and you're collecting the CalPERS pension and you go, start your own business, yeah, we don't care. But as far as Social Security, yet, like I said, I can't answer that because it's a federal program and we're state. I would contact Social Security regarding that, but as far as a CalPERS pension, you're good there. We love all the thank yous. Appreciate that. Appreciate the awesome. Uh, Angeline and I have been here for over a decade, so been here quite some time.
Long time.
Let's see, does one need to have registered for CalPERS before one leaves a prior job with an agency that has reciprocity? Um, Well, to establish reciprocity, there's usually a form you must complete with the agency you're leaving and the agency that incoming and vice versa. But yeah, you usually have to have some sort of service credit on the books.
Okay, Nicole, I sent you a private message.
Just to be extra clear, if I retired age 59 and have 23 and a half years of service at CSU, healthcare continues. Yeah, definitely. Yeah, on the application, it asks, do you want to decline health into retirement? As long as you don't check that box, we will automatically enroll you on the same plan, the same dependents.
Mhm.
I did want to look up that health one though,
Oh, yeah.
like for the newer, like when the 15-year came into effect, that one's like throwing me off and it's driving me nuts.
I'm gonna try to do research too and find it.
Oh, I'm almost there.
Oh, no, Nicole, I sent it's through the chat, but it was just directly to you.
Yeah, so it depends on the bargaining unit. Yeah, so 2017 for most of the bargaining units, except for a few certain ones that are earlier. So if you're state and you came in after January 1st of 2017, most of the bargaining units now require the minimum 15 years.
Perfect. Glad it helped you, Vicky.
How the state share of my health contribution be determined? It's determined by your years of service
Years of service and when you came into state service.
and when you started.
Not unless you're from a public agency or school district, then it's based off of their rules. So if that's who you're with, you would want to double check with your HR department. We'll be logging off about 11:10, so about a couple more minutes.